Hey everybody, welcome back to my channel. My name is Amit, and on this channel I talk about stocks, investing, and finance, and I have $27,000 invested into Palantir, so we're gonna make another video on some due diligence on this company. And today, really important video. Foundry for crypto. Yes, this news is not new, but it is important to analyze. I haven't done a video analyzing it yet, so I really did want to analyze it. A, for me to learn more about the company and for me to learn more about the offering, but B, to discuss what does this mean long-term for the company. Now, Foundry for crypto. If you haven't heard of this before, Foundry is Palantir's flagship software that allows data analytics, visualizations. It combines machine learning, artificial intelligence at the next generation levels, puts them all together to give companies a better understanding of how to optimize their business and their data. Cryptocurrencies, I feel like if you don't know about cryptocurrencies by now, you're probably living under a rock, but that's okay. I am hesitant to do some videos on crypto because I'm trying to understand it a little bit more. I have about 8,000 in Ethereum, which I made about, I think like I'm 2,000 up, right? So I think I invested in like 6,000. I made $2,000 on Ethereum. Have not cashed out yet on Ethereum. I am bullish on Ethereum. I am bullish on Bitcoin. I just don't understand it as much as I understand the use cases for Ethereum, which is why I've invested in it. But in general, cryptocurrencies are digital money, right? They're money that is decentralized. They're money that is not controlled by the federal government or it can't be printed, limited amount of supply. Decentralized autonomous organizations sort of control the cryptocurrencies. There's governance protocols that are distributed among public ledgers, and you're basically able to transfer money within seconds versus days, and there's no intermediacies. There's no Visas or MasterCards that are able to take a cut of transactions that happen. The real reason people are bullish on cryptocurrencies is because ultimately it disrupts traditional finance, right? And this unlocks the potential of decentralized finance or DeFi. And there's lots of different fintech startups those are financial technology startups and apps that are being built upon decentralized protocols that don't require central authorities or entities to ultimately allow finance to be conducted. Now, I'm going to do another video soon, and if the video is already out, then I'll put in the description why I think decentralized media doesn't make any sense and sort of going against the whole decentralized movement. Not saying that I'm totally against it or that's bad, but I do think that a lot of the decentralized movement is kind of fairy tales and people like trying to be pseudo thought leaders about what it like I think centralization of certain things are good. For example, YouTube is a centralized entity that has all these videos. I think that's a good thing, and I'll get into why in that video. But nonetheless, Foundry and Palantir have understood that there is a cultural revolution going on with decentralized movements, particularly in the money transferring spaces, right? And when money is involved in a decentralized movement and the transfer of money or the ability to make money in a way that doesn't require sort of the traditional incumbents that are existing because the applications are decentralized, that's where Foundry ultimately has an opportunity to optimize those things. And this is, before I get into sort of the nooks and crannies of this is why I'm really bullish on Palantir as a company writ large, because they can integrate into almost anything that's being offered on the market, because anything that's offered on the market ultimately leverages data, right? So if anything in the market is offering or leveraging data to be able to make effective decisions or to be able to optimize decisions, and Palantir is a software that is able to integrate easily to be able to give those predictive models for decision making, for data-driven decision making, then you've got something that's really powerful for any sector of the economy, right? Which is why the executives of Palantir are quoted as saying, like, we're solving a problem that people don't know exists yet, because people don't get that data is the new oil. So once they realize, oh, everything my company does, everything that my startup does has to rely on data, we need to make sense of that data. We need to integrate and synthesize that data. That's where Palantir ultimately sort of has its offering. So what is Foundry for crypto? Couple of key points in here that we're going to talk about in terms of what they offer and what they do. Now, there's 4 main things on their website that they said they offer for the powering the future of finance. Number 1 is anti-money laundering. Number 2 is fraud detection. Number 3 is DAPP business intelligence. This is for decentralized apps. That's what DAPP stands for, decentralized apps. And then CrossChain Analytics. I want to talk about each one of these, give a little bit of airtime to each one of these, sort of give my thoughts on it, and then we'll wrap up and sort of explain what it is, what is the long-term impact on the stock because of its ability to integrate with crypto. So first, anti-money laundering. I'm going to do another video on anti-money laundering because I want to talk about that more in depth. But in a nutshell, Palantir Foundry powers multiple factor AML plus KYC solutions. AML stands for anti-money laundering, and KYC stands for know your customer. Know your customer is a term of art that banks use in protection and fraud. So for example, like if I'm like buying something using my Visa, MasterCard or whatever, Visa, MasterCard doesn't make sense. My Visa card. Visa implements a KYC protocol across their banks, or like Bank of America, for example, that uses Visa, so that they know that I am the person that is buying this thing. They can regulate it. They can make sure it's good. That centralized authority is making sure that that me as an individual is actually purchasing this thing, and there's no fraud being done with my credit card or my debit card. So that's really important. So Palantir Foundry powers multi-factor AML plus KYC solutions across fiat and cryptocurrencies to detect complex networks with low false positive rates and robust case management. Now, what ultimately does that mean? Now, that is more about anti-money laundering. I'll leave a link in the description, and you can watch me talk more about anti-money laundering. But anti-money laundering is when financial crime occurs, and financial crime is hard to detect for institutions. This is why companies and particularly banks spend lots of money. We're talking about the tunes of billions of dollars and the tens of billions every year to protect themselves from financial crime. Why does financial crime happen? There are a lot of people in the world that if they get access to your credit card, social security, or certain web routes, IP addresses, etc., they're able to then track back to the stash of money that you have within a central authority and then hack that money and be able to then use that money for whatever they want to do or use your identity. Banks spend a lot of money to try to stop this, because when banks do this, they have to pay back the money to you. Like if I lose my credit card tomorrow and someone spends my money, most likely the bank is going to be good to give me back the $1,000 that I lost. And this is kind of why those central authorities are actually kind of good, right? They're not always the worst things in the world just because they're centralized. They offer some value and some services. So at that point, if Palantir is able to integrate with cryptocurrencies and protect against AML and KYL solutions, anti-money laundering, and know your customer solutions, then you've got something really, really good on its head in terms of its ability to be able to help people and in terms of its ability to actually solve the problems that are going on. Now, the really important thing to understand here when it comes to Foundry for crypto is that cryptocurrencies and blockchains are decentralized, which means if you were to lose your Bitcoin, there is no central authority that can get you your Bitcoin back, right? There's not a Bank of America that's like, oh, you lost your Bitcoin, we're going to pay you back for it, or we're going to go figure out where it is, or we're going to go track it down. Very difficult to do that, right? You might have to get the police involved, and I don't necessarily know how the police will get involved because there's no protocol for them to be able to get involved in things like this. So Palantir is trying to help decentralized applications that don't rely on central authorities in order to build the protocols that they're creating, to integrate their data analytics and anti-money laundering software within to make sure that financial crime, i.e. the ability for you to lose your Bitcoin or for your Ethereum to get stolen on the blockchain, which again is decentralized, so there's no way to really get it back once it's gone. Like when someone has it, they've got it. They've stolen it out of your crypto wallet. In order to make sure that doesn't happen. That requires data, that requires analytics, that requires a lot of intense software, and that is the ability to ultimately stop it. Next is fraud detection. With multi-layered security, Palantir software is trusted by banking giants, up-and-coming fintechs, and regulators alike to deliver real-time fraud detection. So that's an interesting thing, right? That means before the fraud is happening, this is about pattern recognition. So if you're a bank and you're seeing, oh, this person in Japan is buying things at a rate of $50,000 a day, most people don't, or they're depositing $50,000 a day. Most people don't deposit $50,000 a day into their bank. Why are they doing this? Oh, by the way, they're doing this in different ATMs across Tokyo. Like, why are they doing this? Why aren't they just going to the same Tokyo ATM they go to every day? These are intense levels of variables that have to be put together to draw conclusions to be able to make sense of those variables happening at the same time. This is what Palantir would integrate, and it's already integrated with banks, but it would integrate that with cryptocurrencies at scale. So when you have something like a Coinbase, for example, that needs to detect fraud, or a Binance or any other of these cryptocurrency exchanges, and there's a lot of other crypto startups that are happening to be able to protect in terms of safety, security, and privacy to make sure there is no such thing as losing your Bitcoin, or like that it's just so secure like that it ultimately becomes like a bank 5-10 years from now. Palantir would be working with those institutions to make sure that they have the data capabilities to make sense of the patterns that they're creating, and then to ultimately take actions and capture decisions that are valuable to make sense of the data that they're getting, which is really important for security, because I think that's the biggest draw to crypto right now. Like the fact that I don't know that my Ethereum, if it ever got lost, I would be ever to be able to get it back, means I don't put all my money within Ethereum, right? Keep it in the bank, because I know if I lose my credit card, which we all lose it sometimes. I mean, I've lost a card at least 2 or 3 times in the past 5-6 years. You got to make sure that there is some way to be hold on that. Next is decentralized apps business intelligence. So Foundry for Crypto allows Web3 startups to build complex workflows on top of decentralized apps metadata with a rapid speed, enabling data-driven internal product roadmaps, external campaigns, and governance measures. So Web3 I will do another video on this because this is a lot to sort of break down. But Web3 is the transition from Web2. Web2 is centralized authorities ultimately host all of our content and data at scale. Web3 is when users that produce that content are able to own a piece of the pie. So again, I don't want to butcher it too. I am butchering it right now because I'm not doing a more in-depth video on it in this video. But the basic way to think about it is a website like YouTube. YouTube owns the control of the supply and demand of attention that happens on the platform, which I actually think is a very good thing. And there's a lot of benefits to it. I'll get into why in different videos. But a decentralized YouTube would be the video creators own parts of the platform as they're contributing to the platform, right? So it's not just like I make ad revenue from YouTube or I have subscribers on YouTube, but rather I own a piece of the platform that I'm giving the content towards because it is governed through a decentralized mechanism in which users have the ability to own the content and the fruits of the labor on the content and the platform itself, not just use the platform as a way to post content. So instead of posting pictures to Instagram, I own part of the decentralized Instagram. The reason it's decentralized is because there is a blockchain technology, which is the basis for all of crypto, that allows the decentralized version of YouTube or Instagram to be spread amongst all of the millions of billions of users potentially that would use that platform. And if that is the case, then all of those users now have governance protocols, meaning they have the ability to vote on, make decisions on the trajectory of the platform. Now, that is sort of the nature of Web3, right? Web3 is getting away from centralized authorities that are building websites and then getting people to use those websites, and rather transitioning to decentralized websites where people own the means of production, I guess, from a Marxist perspective, on the platforms. I don't think it's necessarily going to work. I'm actually not that bullish on Web3 as in that same respect. I think for decentralized finance, it has some more potential use cases, not necessarily for media. But nonetheless, Foundry for Crypto is specifically focused on Web3 startups within the fintech space that are trying to figure out, okay, how can we bypass these institutions that exist for financial hegemony, and how can we build something that's more user-friendly and that's more meaningful to the user? That's where Web3 crypto startups are integrated with Palantir Foundry. Now, why does crypto play a central role in Web3? Crypto plays a central role in Web3 because it's digital money. So going back to the decentralized YouTube example, the only way for a user to own part of YouTube today is to buy stock in Google, because Google owns YouTube. So if I own 5 shares of Google, then I own 0.0000000% of YouTube as well, because I am a shareholder in the company. Crypto is digital money, meaning it would require the ability for there to be tokens. Just like there's a Google share, right? There would be decentralized YouTube tokens that are powered through cryptocurrencies that users would be able to earn or buy, which would increase the value of the currency, which gives an incentive towards the users that are using the network to make sure the network is more powerful, because then the value of the share, the value of the token, would then increase. I know it's a little complicated, and I'll get more in depth into it in another video, but cryptocurrency is the financial framework that is ultimately allowing a platform like a decentralized YouTube to actually be decentralized, because then you don't need an authority at the center conducting the supply and demand of videos passing through the website. You need a token that is decentralized and democratized so that everyone owns it. And the easy way to think of this is the Bitcoin and Ethereum token, right? Bitcoin and Ethereum, again, are not centralized. They are decentralized, which means if you own a piece of Bitcoin, it is owned by you and by millions of other people. And if you're mining Bitcoin, which is the incentive, because then you get more Bitcoin, and that's limited to supply, so there's obviously an incentive because the price goes up if there's more demand for Bitcoin, then you were able to host Bitcoin on your own computer, right? Which is why millions of computers across the world host Bitcoin. Not just a Google data server would host currently hosts a YouTube. A decentralized server of millions of people that own the decentralized YouTube token would host the videos on their computers. Just like millions of people host Ethereum and Bitcoin on their own computers. It's not controlled by one central authority. So that's the basic way that Web3 startups ultimately operate. Foundry would be at the center of making sure that happens in a much more efficient way. And the reason I'm kind of going in depth and explaining this is because cryptocurrencies are the only reason why this stuff makes sense. If there's no digital tokenization of platforms that individuals are able to then use, which gives them an incentive to make the networks of those platforms bigger, which create the ultimate network effects to give the platform any value, then the whole thing falls apart. And if you can integrate Foundry, which is a software that makes the financial decision-making models of crypto make more sense and more optimized, then you've got a very easy way, along with the fact that Foundry is working with tons of startups, you've got a very easy integration for Foundry to be able to work with Web3 startups to be able to get them to hit scale. Which is really important because we don't know what decentralized apps look like yet, right? This is a very new world. I mean, this is stuff, the NFTs, all this stuff that's happened in the past 7-8 months. This wasn't a thing back in 2020, right? It is literally like a 2021 phenomenon. So really, really important to sort of understand how that's operating. Finally, CrossChain Analytics. Palantir Foundry is chain agnostic and automatically integrates transaction and smart contract data from top main chains to enable rich analytics with low, no code all the way back to the Genesis block. This is really important for a couple of reasons. Number one, chain agnostic means that it integrates with any chain, Solana, Bitcoin, whatever type of chain you're using, whatever type of coin is integrated within your application that you're building upon. Foundry is able to integrate with it, which means you don't need to go through the hassles of figuring out how to make Foundry work for you. Foundry just integrates with whatever crypto protocol you're using, and then it makes sense. Number two is smart contract data. So smart contracts are sort of what power NFTs. Again, I can go more in depth into another video on this, but the ability for you to sell something to create digital scarcity only happens if there is a level of authenticity that proves the thing that you're buying is actually yours. So if I buy an NFT from you, a non-fungible token, and it's a piece of art from you, someone else can just take a picture of that and they can say that they own that. But if they don't have the authentication validation, if they don't have their authentication validated through some mechanism, in this case it would be a smart contract, this is what Ethereum is used for at scale for NFTs, then they have no value, right? So if you actually have the smart contract, the reason it's a smart contract is because it's smart, and that's like a metaphor for it verifies the fact that you have ownership over a digital piece of good. Now you can transfer that smart contract to other people, and now there's an exchange of value. Now there's actual dollars that can happen on the other side of that transaction because it makes sense, because there's actual digital ownership. Before smart contracts, we didn't have a way to create digital scarcity and digital ownership at scale, which is why NFTs didn't really make sense, or buying stuff on the internet from a digital value perspective didn't make sense. Like, you could always buy things on the internet. The question was, if you buy something from a digital perspective that's a really cool photo, could it get value by selling it again, which means the price has to appreciate. The only way the price appreciates is if it's authentic and it's one of one, right? There's a level of scarcity to that ownership in and of itself. Palantir can integrate with those smart contracts. And if you talk about the next era of Web3 startups in terms of digital ownership, this is actually something I am more bullish on, because this to me is not about centralized versus decentralized. It's just about a way of authenticating using cryptocurrencies and blockchain technology if you own something or not. And people have bought into the fact that, oh, this means I own something, this means it's valuable. Palantir can then integrate with that software and that system, then it makes more sense. You're talking about a host of Web3 startups that are sort of building on the backs of even the NFT movement that Foundry's integrated in to make sure that their decision-making and data model visualizations make sense, right? And these things need a lot of data and AI, ML, machine learning protocols, because like, if you don't have that stuff, then you don't have the ability to authenticate things in a meaningful way. Smart contracts are a very, very specific use case that I think Foundry for crypto can optimize. And I think if you're able to then make the data that's coming from those smart contracts make more sense, or even add added layers of security and analysis to make sure that this is digitally authenticated and it's a one-of-one type of thing because of Foundry, then I think the future of finance is in a whole new direction, with all the crypto disruptors that are existing using Palantir not in a way that is a centralized legacy type of technology, but rather something from a cultural perspective makes sense to operate within these startups. And I think those are my closing thoughts here. That's what Palantir is trying to do. It's trying to position itself in a way that allows it to say, hey, we are on your side. We want to be on the side of the creator. We want to be on the side of the disruptor. And because we want to be on the side of the disruptor, you can use our software to make sure that your stuff works and it makes sense. We're already working with banks, right? Palantir is like, hey, we work with banks. We know AML. We know KYC laws. Now we can work with you guys. And as more regulations happen on crypto and Foundry is at the center of that, it's going to be able to adopt in real time to crypto Web3 startups that are able to offer financial services for the next generation of people looking to use them. So really exciting stuff. And those are my overall thoughts. I think A, this is going to increase the value of the TAM. B, I think this is going to make sure that new startups that exist that ever get to explode are going to have Foundry and Palantir at the center of the technology that helps them explode, just like new sales organizations have Salesforce at the center of those organizations to help them achieve sales quotas, which ultimately means it's a good thing for the stock and ultimately is a bullish sign to me for the total addressable market long-term in the crypto sphere that could happen. Bitcoin's market cap right now is about $1 trillion, right? You think if any other cryptocurrencies get to even, 10, 20% of that, and there's tons of them that exist that all exist on different blockchains, and Palantir is at the center of helping those currencies become big, then we've got something big on our hands. So sorry for that long video, about 19 minutes, but that is Foundry for crypto. Those are all my thoughts on it. I'll leave some links in the description so you guys can check out more stuff. Thank you guys for watching the show. Let me know your comments on Foundry for crypto. Let me know if you think crypto is going to work. Is it a scam? Are you bullish on it? Do you have any crypto? And ultimately, what are your thoughts on cryptocurrencies in the next 10 years? My name is Mikko Graja. Thank you guys for watching the Daily Business Show, and I'll see you in the next one.